Welcome to the Capital News. I am your host, Alex Riots. Today is Monday, March 15th, 2021. Thank you so much for joining me. I hope you all enjoyed your weekend. Title of today's podcast, Global Food Prices. We're going to take a little bit of time to read an article discussing global food prices. Of course, this is no surprise to anybody who has been with this podcast for a while. We know what has been happening. We know what is likely going to continue to happen, and we know what is likely to result from all of these increases in food prices, commodity prices, what have you. So this was a decent article out of Axios.com. We'll read that in its entirety. It's not too long, but it highlights a lot of key points, puts things into historical perspective and context, which of course is something we like to do here at the Capital News because I think that is very important to do so. And other than that, it's pretty much going to be a busy news week, although this week has the Federal Reserve with their FOMC starting tomorrow, and it will finish up on Wednesday. That's going to be front and center. So all of the other economic data released this week, yes, it will get some headlines here or there. It'll get a little bit of discussion. But for all intents and purposes, the main focus, the granddaddy story of them all, is pretty much going to be centered around what the Federal Reserve says and does. Not so much does this time around, because they're not expected to increase the federal funds rate, nor are they expected to cut it any lower, which would basically take them into negative territory because we're already at the zero bound, historic lows, basically, with respect to interest rates. So it's not so much what they do, at least not off of this decision following their two-day meeting, but what does Jay Powell, the chair of the Federal Reserve, say Wednesday afternoon? What's in his statements, what's in his remarks, and then how does he answer the questions from the media? And of course, I'm a broken record, I understand this, but I just wish that there would be some journalists who would ask some really tough questions. And basic questions, too. Most of the times they're softball, and even if they do, and sometimes there is an occasional tough question or just a commonsensical question to really be thrown at the chairman, he just brushes it off, he dismisses it, it's nothing to concern ourselves with, this, that, and the other. That's got to stop. It does. It just has to stop. But no politician is going to come to our rescue to demand that the Federal Reserve be held to account, that they really answer these tough, commonsensical questions, because these guys aren't held to account. That's the problem. They're not elected. They are appointed bureaucrats. They can do what they want, and nobody is going to overrule them. Nobody is going to stop them. Not Congress, not the president, not the court system. Nobody stops them. Nobody even really questions them. Politicians love it. They love it because the Federal Reserve can print this magical money to finance all of the nonsense that these people have been passing. We talked about that extensively last week to put things into context. How much money we have just spent in addition to what we are already appropriating would be the third largest economy on the planet. Think about that for a moment. And I'm against big government, obviously. But just for the sake of math, you want to talk about universal health care. But that could have been financed with the amount of spending that they have just appropriated and have thrown through the system in the past year. It could have been done. Again, I am completely against universal health care, the government paying for everything. I'm completely against all of this nonsense, have been from the beginning, was warning about it before it even started. Representation in recourse, thecapitalnews.com, check it out. A letter written to my congressmen and senators, and I also took the time to read it aloud too for the podcast audience. I've been against all of this stuff from the beginning. If the Congress wants to help people, what they could have and should have done before was to reappropriate the money that had already been appropriated. If the private sector is suffering, then that means that the public sector also has to suffer, because the public sector lives and survives and exists because of the private sector. The government just doesn't have money. They tax it from private production. That's how this works. And a lot of people don't understand this. The people just think that the government has money. I mean, that's why we're in so much trouble in this country, because people just don't understand how things work around here. They have no clue at all. They think the government just has it. And at this point, it basically does, unfortunately, because the Federal Reserve is just going to print whatever it takes. They don't care. They don't care. But that's what the government should have done if they were going to do anything, is to cut their spending, reappropriate what was already going to various departments and say, okay, you don't really need it. These people are losing their jobs. These businesses are being shut down. So we'll just reallocate this money, reappropriate it to go to these people in the form of transfer payments. What they could have done was said, okay, we're going to put obviously a hiring freeze on federal government employees. We're going to cut everybody's salary by a certain percentage, and then they could take the time to go in deeper and perhaps cut other people's salaries even more, depending on how much they get paid. And they could have cut benefits, etc., etc. That's how the government could have handled it, not by throwing trillions and trillions and trillions of dollars worth of debt into and onto the system. Because that comes from somewhere, and it comes from the future. It is future growth and prosperity that has been stolen just to fill a void. And nothing productive has come from these efforts. There is no major coast-to-coast infrastructure spending projects underway. There's nothing. There's no major job retraining and retooling across this country to help people get the skills they need. There's none of this. This is just throw the money into the system. It's the nepotism. It's the good old boys club. It's bailing out pension funds. It's bailing out cities, localities, states. That's all it is. It's just a bailout. It's just greasing everybody's palms. The money that's going to a lot of Americans who haven't lost work, quite frankly, obviously shouldn't be getting it. But no, that's what we do here in the Banana Republic of America. That's what we do now. Just print it. It's sit down and shut up money. And when we get to the global food price article, you're really going to understand, if you don't already understand, why I have been saying this is sit down and shut up money. Because the rest of the world doesn't get sit down and shut up money. We get it. What the rest of the world is getting is higher food prices and commodity prices, as we are. But when you get sit down and shut up money, it buys you some time. Like I always say here, if you spend trillions of dollars more than what we bring in, I'm going to show you a good time too. We can kick the can down the road. We can make things look better than what they actually are. That's called distorting the markets. And that is not good, and it is not going to end well. So a lot of news coming down the pike. We are no longer, and haven't been for a long time, a free market capitalistic system. That is going to be on full display on Wednesday at the conclusion of the FOMC meeting, when all markets, trillions and trillions and trillions of dollars globally, are waiting to hear what one idiot has to say, as he announces what a group of about 12 idiots had to say around a big table earlier that day. Markets are supposed to be about everybody, not a bunch of idiots sitting around a table deciding what interest rates should be and how things are supposed to be interpreted and blah, 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 blah. It's not how it's supposed to work. ECB was in the barrel last week. Yeah, okay, we're gonna speed up. We're gonna speed up our bond purchases and everything that we're doing. Now they can kick the ball and send it to us here in the US of A. It's quite a joke, but hey, that's where we live. That's what's going on. I mean, look, like we said last week on Friday on the weekly wrap-up, when it's all about bread and circuses, when it's all about the royal family and cancel culture and shutting down Piers Morgan, a British morning talk show host, for saying something that a handful of people thinks controversial, it's ridiculous. When you're shutting down Dr. Seuss, what we can and cannot read, it's ridiculous. That's why I brought those topics up last week. Because it is ridiculous, and it is only going to get worse. And nobody cares. That's the other sad thing. Just let it happen. Let it happen. Here's some market performance. We have the dollar index at 91.78, so still around that 92 handle. Not a lot of volatility on the Forex markets right now in the overnight session. Bitcoin is at $54,700 a coin. Somewhat in correction mode from its recent high over the weekend, 61,000 a coin, I believe, somewhere around there. So this is just perhaps another correction as it continues to move higher. Or perhaps this is something bigger, but time will tell. Overnight futures trading, we have the Dow Jones and the S&P 500 both down, but relatively flat. The NASDAQ 100 is putting on an overnight gain of about 1/3%. Japanese cash trade putting on a gain of 0.5%. Pretty much a down day across the board, across the pond in Europe. Australian cash trade putting on a gain of about 0.8%, and the same for Chinese stocks. And of course, it's March 15th. Beware the Ides of March, right? This was when the conspirators put an end to Julius Caesar, et tu, Brute. WTI is $64.86, Brent $68.31, natural gas down $2.49. Gold and silver having a decent day today, both. Gold at $1,735 an ounce, silver at $26.22 an ounce. And Uncle Sam's 10-year junk note is yielding 1.61%, which, of course, is why the markets are paying very close attention to what the Federal Reserve and other central banks are doing and what they are saying, because they are growing concerned with these rising yields with respect to global bond markets, especially sovereign government bond markets. And of course, this is going to have some quite large ripple effects, I do believe, with respect to emerging markets, especially if the dollar also continues to climb higher. Again, this is basically your dollar doom loop scenario that we have discussed many times over as a very likely possibility as things start to unwind. And this is when we will likely also see a lot of breakdowns of traditional and historical correlations and relationships between various financial assets. How things might typically correlate positively, might break down, might become neutral, might turn into a negative correlation as opposed to a positive. It doesn't mean it's going to always be like that. But when you have so much distortion in the marketplace, this is what's going to happen as these things unwind. I'm not going to sit here and pretend to know every correlation that's going to break down or have issues, to what degree and what duration. But these things are going to occur. They just are. Crazy things have already been happening. We're going to see that in mass. We're going to see it on a huge scale of epic proportions. This is going to unwind. That's like I've said many times before. It doesn't matter. It doesn't matter what I say in my belief with precious metals and gold and silver and commodity prices doing well. When this thing explodes, and it will, I don't think anybody's going to be safe in almost anything. Whether you're holding cash, whether you have gold and silver, whether you have commodities, whether you have these high-flying growth tech names. That's why I say at the end of all of my podcasts, stay diversified and stay vigilant, because that's all the best we can do. Because these people are at the helm. They don't know what they're doing. They've caused these problems, and they want to continue to put on a show. They want to continue to play illusionist, because that's all they're good for. That's all they're good for. They're just a bunch of con men and women. That's it. Believe us. Believe us. There's no inflation. If there is inflation, we can contain it. Don't worry about it. Don't worry about yields going up to 1.61% on the 10-year. That's actually a good thing. That's about growth. Although other central banks say, no, we don't think so, and they panic. And they throw billions of dollars into the system basically overnight to try to combat their rising yields. Well, what's the problem? I thought the economy was growing. Why are you trying to send a signal that shouldn't be happening? They can't get on the same page. They are trapped. They are busted. That's all you're seeing. And here you have from the RBA, the Reserve Bank of Australia, rising commodity prices were unlikely to lead to a rise in inflation in Australia unless labor markets tighten significantly. They're putting the cart before the horse. These are supposed to be economists. They're supposed to understand how this stuff works. Commodity prices are rising because there is inflation. Inflation is at the printing press. Inflation is an increase in the money supply, period, and a story. That's all it is. With huge implications, ramifications, and consequences. Mostly negative. That's why we're seeing commodity prices increase. They're trying to make believe that the only way that you're ever really going to see inflation in the land down under is if there's a tightening labor force, which means there's more people going back to work, and that should increase wages. And so if people's wages increase, then that will trigger inflation. No, again, the inflation has already occurred. The Reserve Bank of Australia was one of those countries that panicked a couple of weeks ago and threw several $billion into their bond market to combat their rising yields with respect to their debt market. They are causing the inflation. Clearly, these people have no idea what occurred in the 1970s here in the United States called stagflation. Stagflation, a stagnant economy with inflation. That's what's going to happen here. Again, and it's almost going to be a global phenomenon, especially in a lot of developed countries, because economies are going to be stagnant, and with all of the inflation that they have thrown into the system, well, it doesn't take a genius to figure this one out. That's what's coming. In many places, it's already here, but nobody wants to tell you this. Nobody wants to be honest about what's right in front of you. Okay, and again, what buys us time here in the United States, we're the largest economy on the planet. We're a diversified economy. We have the reserve currency, and we can export a lot of our policies and a lot of our inflation. And that's also going to take us to our global food price article, which we'll get to again in a minute. But to Bitcoin real quickly, too. My brother showed me something interesting earlier today. He shared with me something from Kevin O'Leary. You're all familiar with Kevin O'Leary, I would imagine. An investor, Mr. Wonderful on Shark Tank. I'm sure many of you know who he is. For the longest time, he was at least a critic and critical of Bitcoin. I don't know as to go so far as to classify him as a bear on Bitcoin, but he was definitely critical of it and was staying away from it. Well, he had recently sort of capitulated and said, okay, well, I guess I'm trumping this up. I guess it would be because of the fear of missing out. So he got hit by the FOMO bug. Well, everybody else is in it. The thing keeps going up in price. Let me get in on it and maybe try to make some money. Now, he has investment funds, but he has not invested his clients' money in Bitcoin. He has invested his personal money in Bitcoin, which, of course, is perfectly fine. Your money, you do what you want with it. I don't have a problem with that. Of course, I think Tesla and Bitcoin and a handful of others, but those are the two granddaddies of this, I think, are going to be the poster children of this virtual everything bubble. But nonetheless, Kevin O'Leary flipped from being critical to investing in it and thinking, okay, this thing might have some legs to run higher. And of course, that can still happen. If you continue to get more fools into this thing to keep bidding the price up, well, that's what's going to happen. But today, in this little interview that my brother shared with me this afternoon, Mr. O'Leary is now coming out and is worried once again about Bitcoin, because I guess he has had maybe some investors of his calling him up, some clients and some institutional investors that he may work with or knows personally, whatever, and having some conversations with them about Bitcoin and how a lot of them are starting to shy away from getting involved with Bitcoin because they don't know where a lot of these coins, these Bitcoin, are originating. If they're originating in China or Iran or Russia or Venezuela or a whole host of other countries that might have mining operations to produce Bitcoin, and they don't want to be caught purchasing Bitcoin, not knowing where they come from. But obviously the countries that I just rattled off, they're concerned, well, because maybe the United States or other Western economies who we have an alliance with, we're putting tariffs on these various countries. We're putting economic sanctions on these various countries, and they don't want to be associated with Bitcoin. They also have sustainability concerns now, right? Everybody's got to check all of these little boxes. Are you going green? Are you going green? Are you going to be environmentally friendly? Well, Bitcoin uses an immense amount of energy. Okay, it's expensive to transact in. It is, go down the list of things. So now people are starting to pay a little bit more attention, I guess, as opposed to just reading the headlines, trying to listen to somebody who's trying to pump it up on CNBC, Fox Business, Bloomberg, what have you, and say, well, we got to take a deeper look at this. Does it actually make sense? And you have some other countries starting to crack down on Bitcoin, on mining operations, and just outlawing any type of transaction in Bitcoin whatsoever. I know there's a law being proposed in India, which basically will ban it and outlaw it completely. Now, that's a proposal. It doesn't mean it's going to make its way through. But if governments around the world try to strangle this thing, they will strangle it. If you can't transact in it, if they don't allow people to do commerce with it, well, then that's it. I mean, that's going to be it. So there still remains a lot of risks out there for Bitcoin and a whole bunch of other cryptocurrencies. A lot of regulatory clarity still needs to come down the pike. Again, this doesn't mean that Bitcoin can't go higher. Most definitely can. But there's a lot of headwinds out there for it. And I think people are just looking at dollar signs, even though they also think that the dollars are worthless. But I guess if they're holding Bitcoin, then that at least helps them get above it. And for some, it has. The question is, how much longer will this continue? And we'll continue to monitor it. But I am no fan at all of Bitcoin. Now, the technology of blockchain and all that's a different story, but we'll leave that for another day. But I thought that was interesting because I think you're going to see more people like Mr. Wonderful Kevin O'Leary, who may have been critical once and then they got on board and now they're having second thoughts again. So we'll continue to monitor. So here's our article here out of Axios with respect to rising global food prices and how they start to connect the dots of how this can lead to social unrest, which of course is something we have been focused on here for the past 2 years since this podcast has been online, because we understand the interconnectedness of things. It doesn't mean we have a full grasp of everything. Nobody does, nobody can, but at least we respect it. And I think that's important. So global food prices have been rising for months, putting additional pressure on the world's poorest people. Past spikes in the price of food staples have been connected to periods of social unrest, including the Arab Spring. If prices continue to rise on top of the pain of the pandemic, the world could be in for a bumpy future. That's putting it mildly. And finally, some others in the media are finally catching on to what we have been saying here, again, for the past couple of years. And as the old saying goes, revolutions are fought on empty stomachs. Global food prices rose by 2.4% in the month of February, according to the Food and Agricultural Organization's Food Price Index. That marks the 9th straight month of price rises, causing the index, which is adjusted for inflation, to reach its highest level since July of 2014. In the U.S., prices rose by nearly 3% in 2020, roughly double the rate of inflation, putting pressure on the poorest Americans who spend more than 1/3 of their income on food. But the real threat comes in countries where large portions of the population live close to the edge of hunger. Brazil, which is already dealing with the world's worst active COVID-19 outbreak, experienced the fastest increase in food prices last year relative to inflation. And don't forget, as we discussed last week, the Brazilian real, their currency, was depreciating against the U.S. dollar quite significantly. And if this continues, this is not going to bode well at all, economically, financially, and socially, for a lot of these emerging markets. Believe me when I tell you. In Russia, food costs have been kept in check only because of tariffs and export controls, but those measures have fueled inflation and are unlikely to keep prices from jumping when the policies are lifted at the end of March. In Nigeria, where the average household already spends more than half of its income on food, supply bottlenecks and a tax on farmers have contributed to rising prices. And of course, Nigeria has been a country we have singled out as an example because this is, I think, the largest economy in Africa, an extremely important country on the geopolitical scene, a major producer of oil and gas, and a population that is extremely young. And according to the IMF, I just don't believe that their GDP growth forecasts are going to suffice. these people are going to go hungry. They're going to revolt because they're not going to have opportunities to better themselves and those of their family. So it's interesting that this article also picks up on Nigeria, which of course has other issues with respect to inflation and food prices. India has helped keep prices affordable by spending the most in the world to subsidize food, but it's been racked by farmer protests over plans to unwind that support, which is likely to translate to higher prices and more unrest. This is a vicious cycle. Governments are right to worry about the effects of rising food prices. Past spikes in 2011 helped fuel protests in the Arab world, and record high prices in 2008 contributed to instability throughout the global south. A growing food crisis in Sudan, where inflation is in the triple digits and the price of bread has more than doubled, has helped lead to rising protests against the joint military-civilian government. In Lebanon, food prices quadrupled in December, leading angry protesters to set up roadblocks over the government's failure to act. See, I just wish all of these people out there who are talking about deflation, let's put them on an airplane, let's strap a parachute to their back, and let's throw them into Sudan or Lebanon or Nigeria or Russia or any of these other countries. And let's see if they can spot deflation. Let's see if these people are fighting their governments in each other in other countries. Because the cost of living is so damn affordable. It's not. I don't know how these people can't make these connections. These price spikes, this is a quote, we'll get to this, these price spikes are destabilizing, not just because they induce a lot of hardship on communities and households, but also because there is this expectation that the government will do something about, this is according to Colin Hendricks, a non-resident senior fellow at the Peterson Institute for International Economics. Quote, the implications are going to last longer and beyond the pandemic, end quote. Couldn't agree with them anymore. This is going to last for quite a while. The food price spike has multiple interlocking causes. COVID-19 lockdowns are a wrecking ball for food systems, and extreme weather events like what we just witnessed in Texas can also play a role. But the crisis is also a reminder of how interconnected and vulnerable the global food price system is, or the global food system is, with the world's poorest dependent on food flowing from the biggest producers. In a study published in Nature Food this month, researchers found that restrictions by as few as 3 key exporters would be enough to increase the price of wheat by 70%, while maize and rice would rise by 40% and 60%, respectively. That's huge. Even consumers in well-off countries are not exempt, with food producers reducing the number of items on sale and shrinking the size of processed food to keep prices seemingly stable. What have I been telling you? Make a list. Start checking it. Put down what you're buying, what you're paying, what's the volume. 16 ounces, 12 ounces, a 24 count, 36 count. See what happens, because they are going to start shrinking. If it hasn't already happened, and I know in many cases it already has. So that's in order to maybe maintain prices, but I bet you're going to get screwed twice with higher prices and less volume. So pay attention to it. I could have written this article. I have to applaud the author of this article on here. So that's something to pay attention to. Shrinking the size of processed food to keep prices seemingly stable. But COVID-19 has still pushed 13.2 million Americans into food insecurity, an increase of 35% from 2018. But don't worry, the Dow Jones Industrial Average and S&P 500 are hitting all-time highs, and the NASDAQ will probably catch up to them in a not-too-distant future as long as Jay Powell and company can continue to flood the system with trillions of dollars. But that's okay. That's all right. 13.2 million Americans are suffering from food insecurity. Don't worry about it. Prices are well below their 2011 peak, and there are signs that grain price increases are slowing, even as wheat output is forecast to reach a record high of 780 million tons next season. Still, increased production won't help if the pandemic prevents food from reaching the needy, and over the long term, climate change is likely to increasingly disrupt farming. The bottom line, according to this journalist, more than politics or the pandemic, It is food scarcity that will bring people out into the streets, which is likely to make the next few months unstable ones. Again, couldn't have put it any better myself. Have been saying that for months. Really, the past 2 years. But it is. It is more than politics, and it is more than the pandemic, although all of these things are connected. Revolutions are fought on empty stomachs. Every little price increase is going to make that much bigger a ripple across the globe. It's not going to take much. That's how sensitive everything is. That's how fragile everything is. That's how big this bubble is. So, there you have it. 15th of March, 2021. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.